I'm sure we can. Yeah. Okay, good. Right. Let's start with currencies and then we'll do indices. So we'll do indices second and currencies first. So to pick up on the Forex market, this is a great way to lay out charts, and this is really a manual matrix. We're looking at the dollar here, all the same time frame, 2 minutes across the top, 2 minutes across the bottom. So every chart is 2 minutes. We've got euro dollar, Aussie dollar, and New Zealand dollar on the top line, and we've got dollar Swiss, dollar CAD, and pound dollar on the bottom line. And what this gives you is several things. First of all, it gives you a very, very clear view on the dollar. Secondly, it tells you whether sentiment towards the dollar is the same across these major currency pairs, which clearly it is, because the dollar is being bought against euro, bought against Aussie, bought against New Zealand, and in the same way that the dollar is being bought here in the uptrends, because dollar is the primary currency, not the counter currency. So dollar Swiss is rising, dollar CAD is rising, and pound dollar is falling because the dollar is the counter currency. What that tells us is the market is currently buying the dollar on this time frame. What it also gives us is several other things. First of all, it gives us a view on VPA across the various currency pairs. So we get slightly different interpretations, but nevertheless confirming one another in terms of what is going on. So we get lots of different VPA signals and confirming signals. And secondly, we get this lovely inverse view of what is going on. So we have an inverse view here on the dollar CAD, and we have an inverse view here on dollar Swiss. So it just brings together lots and lots of different aspects, and it gives you a very clear view on what you should be doing, whether you're selling the dollar, whether you're buying the dollar, and how long you're going to stay in. Obviously, that depends on the time frame. You'd have this set up in multiple time frames, but it just gives you a great visual representation of what is happening to one currency in this chosen time frame. And in addition, it gives you this lovely inverse picture of rising against falling. And we, of course, get multiple views of volume price analysis with which to interpret all of that data. So it's just a great, simple way of setting up your charts in this way to give you more confidence when you're trading. Now, going back to the MNQ, this is what I was talking about earlier on, right? This is the MNQ. It's the same as the NQ. And on here we go to 5 minute. This is just a classic example of a price waterfall in operation. This is 1:30 our time, which is an hour before the cash markets open. And this is 2:30 when the cash markets did indeed get underway. And it's a classic example of a price waterfall. It's what you need to look out for. Several things. In the initial phases, we've got, I couldn't draw this schematically any better than we've got here. We've got widening spreads, which is what you want to see because that signifies increasing momentum in the move. And we've got rising volume, which confirmed the two together tells you this is a price waterfall and it's got momentum and it's perfectly valid. There's no anomalies here. We then move into a congestion phase because we get a volatility candle here prior to the cash open. We go sideways, no great surprise. Then we start to dive down into the next phase, and this is where the cash markets open and the volume becomes increasingly dramatic, which is what we expect to see. When I was talking earlier on, I got to this phase here and I said, we've now got a bounce. We've got a lot of volume coming in here. These are classic re-entry signals. If you missed all this for whatever reason and didn't get in on that phase, then this is the next phase to jump in on because you've got a ton of volume coming in. The market is rallying. And what's actually going on in here is the market makers and big operators are selling into weakness. They are selling in this phase of price action. They are selling to traders who believe this market has hit the bottom because you have indeed got some compression in price here. They're buying in here. They're selling to them in a very weak market, but nevertheless, they are forcing volume into the market to the buyers. Buyers who are out there, and then the market collapses because there are no buyers left, and we know we're going to go down into the next phase. So this is a great place to either enter or to give you confidence if you're already in this waterfall and you've taken a load of money out already. Then you sit tight, and obviously what you would also be doing at that point, you'd be looking at other time frames. You'd be going down to maybe a 2 minute time frame, because what we're doing constantly is we are breaking our time frames down. We're opening them up. We're breaking a 5 minute down into a 2 minute. We want to see what's going on. huge volume coming in here, more huge volume coming in here. It's just accelerating, accelerating. And you can see these weak rallies, the weak effort to rally. We've got wick to the top, wick to the top, wick to the top, wick to the top. That's a market that is desperately weak. We get the same here, another wick to the top, down we go, and on down we go. There's no signal, there's no sign at the moment that we've got any strong signs of this market being supported for the time being. So it's a very straightforward trade. We just keep sitting in that trade, waiting, waiting, waiting. And what we're waiting for is to see the stopping volume, if indeed it comes in later on, and any reversal. And what's interesting about what went on earlier on, this is on the NQ, as I say. Let's just rearrange that, get that up there. This is on the MNQ, but the NQ would be the same. This is the micro contract. We go and look at the YM. What actually happened on the YM, we got a reverse counter trade, because the initial open on the YM was signified with a big up candle, and that was in contrast to what else was going on elsewhere, and the huge amount of volume under there. And it reinforces the fact that when you're trading the indices or when you're looking for market sentiment, you need to look at all three, because whilst typically they will tend to move in pretty much the same direction, that is not always the case. And it was classic, this, just as I say, about half an hour ago when the YM actually spiked up, everything else was going the other direction. And now the YM has rolled and is now following them. So if you're in a situation where you're trading long in one index and you're not aware of what's going on in the other two, as was the case half an hour ago, 40 minutes ago, then it gives you an insight into what is like to happen with the YM. Is it like to go higher, or is it going to go lower? Well, if you've got the ES and the NQ both falling heavily, then the probability is that it's going to follow suit, and therefore you are trading with a much greater degree of risk if you're going long as opposed to going short, which is what's actually happening now. And it's rolling over. We've got rising volume coming in on that one as well, and widening spreads. So it's all looking pretty bearish at the moment. It's no great surprise. And just go back to the NQ. There we are. This is on the day. So just have a quick look at the dailies. The ES has bounced already. Just looking over on some other screens. Okay. This was yesterday's candle where it did recover, but it was a bit of a struggle. Looks as though we could get a similar day today where the market falls and then recovers. Who knows? But really what was triggering all this a reversal, which we're now seeing, which we highlighted on various, Anna highlighted on various Twitter posts and what have you, scrolling right back to here. This was what we've christened the Trump candle. The volume under here was ludicrous, ludicrously small, not ludicrously large. It was ludicrously small. This was a lack of participation by the insiders and market makers, just simply allowing the market to fall. They were not participating because they were going to take the market back up. And probably the market reversed, which is what we expected. We have a lot of buying coming in here, certain amount of buying coming in here, and then we came up into this phase, which was really the key to the whole thing, because what we saw over this period was three things. First of all, narrowing spreads, which is not a great sign. Secondly, gap moves, which again are worrying. But thirdly, and most importantly, not only was the volume falling, but the volume associated with this move particularly was a joke. There is no way on the planet that that amount of volume would constitute a move of that significance from here to here, followed by a follow-through day like that. It was absolutely ridiculous. And therefore, as soon as these started forming, it was fairly clear that we were certainly reaching a point where we're expecting some sort of reversal. Everyone's signaling the top of the market and saying, well, we're going to be in for a big bear fall. Possibly, possibly not. But nevertheless, this is what we're expecting, a reversal. We were heavily moving back into cash at this point. We are very limited exposure to equities right now, say, because we've moved back into cash during this phase here. And if I change this over to the YM, it was even more stark on the YM, because not only did we have the same sorts of moves where we had these narrow spreads, but also absurd volume. We also had a whole series of shooting stars, one after the other. We had 3 days. And if 3 days of shooting stars is not significant to you, then it really should be, because it's giving you a pretty strong signal that this market is desperately weak. And therefore, at the very least, we're going to get some sort of correction and possibly a full-blown reversal into a bearish trend in due course. That will be seen in the fullness of time. But that's where we are. And all of that was revealed through the prism of VPA. I'm going to stop there very quickly just to remind you we have a Black Friday deal running at the moment, which is 20% off. And that applies to indicators, all indicators, all package bundle deals. It also applies to the education program. So just email either helpdesk@Quantum Trading or helpdesk@quantumtrading.com with the code LS20%, which means you've been along to a live stream or you've watched a live stream, LS20%. Put it in the title or put it in the body of the text, and tell us which indicators you want to purchase, and we will put together a coupon for you, or which program you want to purchase. Same applies. We'll put together a coupon for you to apply in the shop, which will give you the discount of 20%. As I say, that applies to everything. It doesn't apply to EPP subscription payments. It applies to simply the full price for anything, whether an indicator or a program. If you want to catch up with Anna, you'll find everything over here, annacoulling.com. The VPA book it's been available in full color paperback, as indeed are many of the others now. Been up there for a while, very, very popular. And in addition, the audio version went up earlier on this year, read by Anna, not read by a robot, read by her. Very time consuming, I have to say, but it's really nice. And what a lot of our customers like to do, and also our students, they like to have the paperback, and they also like to have the audio version to listen along to the paperback because it's an identical facsimile of the book, as you would expect. So you'll find everything there. In terms of the indicators, you'll find them over at quantumtrading.com. The 4 platforms: TradeStation, TradingView, NinjaTrader, and MetaTrader 4. And finally, over on the education site, quantumtradingeducation.com, we have the 2 programs, one for stocks, one for Forex. As I say, if you want to apply your 20% discount to that, it's a cracking deal. And that's our Black Friday deal, which is running live at the moment. Just email us at the help desk. Hope you've enjoyed it. Thanks for watching. I'm going to stop sharing there, and I'll get Anna to stop the